You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 1:30 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuikStrike, options pricing and analysis software. QuikStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuikStrike has you covered with market data reports ranging from open interest to the term structure of volatility. QuikStrike is the perfect addition to your trading toolkit. Learn more about QuikStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuikStrike1. That's QuikStrike1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody, that funky tune means it's time for a funky fun show. Yes, it's time for TWIFO, This Week in Futures Options, a program where if you can't figure it out from the title, we look back at the week that was and indeed still is from a futures options trading, trending, analysis, unusual activity, volatility, skew, all that fun stuff you like to talk about. We do it here for you on TWIFO. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the aforementioned Options Insider Radio Network. And welcome to 2018, our first TWIFO ever for 2018. Very exciting stuff, a great year to kick off, and lots of good stuff. Of course, you can kick it off a lot of different ways. You can join us on the podcast, as I know a lot of you guys like to do. I know you hardcores, maybe you're frozen, maybe you're frozen at home today. Hopefully your power is working and your internet, because if so, you can join us live 1:30 p.m. Central right here, right now, via Mixlr, MIXLR. If you don't know the link, we put it out all the time. If you don't know the link, just grab it from our social media. Head on over to Mixlr, MIXLR.com, and just search for us, Options Insider. You'll be able to find it. It's just one link. It never changes. So you grab it once, you set it, forget it. Maybe you want to follow us in Mixlr, as a lot of you guys do, so you get notified the second we go live. Then you can join the live fun party, which, quite frankly, I did like today. Maybe you're frozen in at home. Maybe you want to get away from the kids who are home because they're off from school, whatever the case may be. You want to just sneak away for a little futures options talk. Don't worry. We got you covered here. And, of course, however you listen live after the fact, hit us up. Questions, comments, insults for Nick. We accept them all here on good old Twifo. Speaking of my cohort, my partner in crime, Mr. Nick Howard, the founder of Bantix Technologies, creator of a little program we like to use around here once or twice called QuikStrike. Mr. Nick, welcome back to the show, and happy 2018. Happy New Year to you, sir.
And same to you. It's a rough week to be back. You get off for those holidays for a couple of weeks, and it's just everything piles on. So it feels like Friday for sure, even though it's only the fourth day of the week. So I'm ready to go.
It feels like Friday because of all the action that's been lighting up the week, sir. That's what you meant, right? Like just crazy action.
Oh yeah. Well, no, it was a busy week, good week, interesting stuff going on in the market. A lot of follow through some of the stuff we talked about. A lot of crypto action this week. In fact, some surprising action, the Bitcoin, especially today. So yeah, good week, but just exhausting and working so much, and it's the holidays always murder me. Like you said, kids home, schedule to change. So I'm ready to go.
Well, before we get going with this week's action, I thought we'd look in the rearview mirror a little bit. I know we did a lot of that on the last show, looking back on the whole year. We're going to do something a little bit different this time, listeners. We compiled the data hot off the presses, hot off the analytics package right here, right in front of me, listeners, for the top 5 episodes of Twifo for 2017, as chosen by you, the listeners, because you're the ones who listen to them. So we got them here, top 5. Before I break down the list for you, Mr. Nick, do you have any thoughts? Do you have any? Are there any episodes that really stood out to you? Or if you want to make it easier for yourself, you want to pick a particular episode, because that can be hard. We did a lot of them last year. Maybe there are some thoughts, some trends, some products, some events that really resonate with you that you think translated into popular episodes. What are your thoughts, sir?
It's a tough question because I have certain episodes after they happen where I feel like those were more interesting than the others. But I have a few. I have a few where we talked about where we just discussed. I don't remember particular when Jeff White was on. I like that one. Anything that Eric was on, I thought those were good. And then when we had, interestingly enough, when we started talking about Bitcoin, QuikStrike started to get a lot of Bitcoin followers. So I'm imagining one of them is going to be in the last quarter for sure, especially around the Bitcoin stuff. So it will be interesting to see what you got from a pure number standpoint.
Yeah, that's kind of interesting. It's like a lot of our shows we've been looking at this week. The top 5 are kind of a smattering, kind of across the board. There's no one time period, no one event, no one series of shows that really dominates everything. The one area everyone kind of guesses for the shows, and spoiler alert, may kind of work for this one as well. Not quite as high as some of the other ones, though, is, of course, the beginning of the year. We had a new administration coming in, so a lot of people were tuning in, trying to figure out what the heck was going on with not just the broad equity markets, but, of course, the commodity markets as well. So that's an interesting one. You mentioned the Bitcoin. That's interesting. And Q4. Let's see what we got here. Actually, our number 5 one here is pretty much our only Q4 one on the list. And it's episode 75, A Furious Frenzy. How's that for alliteration, listeners? A Furious Frenzy of NASDAQ options that came out pretty much on Halloween, October 30th of 2017. I know there was a lot of index action at that time, so we broke down a lot of fun index action there with talking, S&P, of course, NASDAQ, of course, Russell. So we don't get a chance as often as maybe we'd like to talk all things index here on the show. So it was kind of fun, and you guys clearly enjoyed that one as well. And let's see, we had, we talked there. NASDAQ skew was a big topic on that one. People asking, as always, if they could buy options on milk. That's the thing. We talked NASDAQ, and we talked a lot of Crude. NASDAQ skew was looking pretty wonky that week. And apparently you guys were all on board with that one. Number 4, come in earlier in the year. This is episode 43. This is one of our few kind of really Fed rates kind of oriented one. It was the Fed non-farm payrolls and rates from March 6th of 2017. And as the name implies, kind of all Fed dominated. And, we didn't really get a chance to talk a ton of rates last year because, quite frankly, that early in the year was really the time the Fed was kind of more at the driver's seat. Towards the latter part of the year, the Fed was kind of taking a bit of a back seat, so it wasn't as big of a market mover. Things like non-farms, things like the Fed, things like you guys weren't even writing in with a lot of rates questions towards the end of the year. So it seemed like early in the year was the time rates were captivating people, and the numbers bear that out. March 6th, the rates episode, number 4 on our list. Number 3, episode 37, going all the way back pretty much close to the beginning of the year, a very auspicious or perhaps inauspicious period, depending on your views. It was episode 37, Trump versus oil traders, from January 23rd, so just 3 days after the inauguration there. And interesting stuff. Obviously, a lot of people had a lot of things on their mind at that time. But at the time, there were some comments and there were some big movements already being felt in the crude market as a result of some proposed or some anticipated moves by Trump. So we broke it down on that episode. Particularly, I believe it was the WTI Brent spread that was really moving and rocking and rolling at that time. So that was kind of maybe a little bit of an indicator of what we'd be talking about a lot last year, which was crude. Crude was a big driver for TWIFO and big for you guys, obviously, as witnessed by our number 2 episode, episode 51, Crude Volatility Strikes Back. This is from May 8th of last year, and the name kind of implies it all. That's, if there was a theme maybe to TWIFO of last year, with the exception, of course, for Q4 being Bitcoin. But the rest of the year and most of the year, if there was one narrative to TWIFO, it was kind of when will crude vol really roar back to life? When will we see it? A lot of you guys were asking us this question throughout the year. We had an episode devoted to just that back in May, and you guys clearly liked it, to the tune of our number 2 episode. Last chance, Mr. Nick. First off, do you have any thoughts on our top 4 here before I get to the number 1 episode? And then B, if you have any other thoughts on what our number 1 episode is, have at it, sir.
I think the greatest recollection I have is the WTI Brent stuff, because that was pretty interesting for an extended period of time. And of course, that was when the president was, spouting off about the different sort of taxes that might take place to cross our borders in terms of goods crossing in from outside. So I think we did get a handful of weeks where there was some good trade going on. I think even at some point the Journal had mentioned some stuff that we were talking about. So that one stands out for me quite a bit. I'm looking back to May for the for the crude oil strikes back, and we did have a pretty good burst, almost like a 6 or 7 vol move up in that May. So I'm sure I remember that. And what did we have? And that's when the futures were breaking at that time. So we were coming off of some sort of flat highs, or some 55 strike range, I believe. And we were hovering around 54 for about 2 or 3 months, and then we broke, and that's where WTI might have struck back. But do I have? No, I don't. I really don't have a good guess. I remember we had one really good show, and you sent me some stats from it. I don't remember what the name of it was, but I do recall hoping that those numbers would continue going forward. So let me have it. What was it?
All right, the number 1 show for last year, TWIFO 2017, was episode 61. Again, a nice smattering from all throughout the year. There was no no dominant period. Episode 61, a crazy week for corn and crude, from July 24th of 2017. Let me just scroll down really quickly. You can find all these yourself, listeners. We'll post the full article so you could see them all as well in one place and stream them. But this episode, actually, we had Matt. I think this was Matt's appearance where he made his prediction of the range for crude. Had the 52 on the upside. I believe that was his first appearance on the show. So we talked a lot of crude, as you might imagine. Also a lot of vol. We had flash poll on soybeans New Zealand dollar came in as a surprise product of the week. And we talked a lot of corn, too. I believe that was lighting up Matt's tape over there at RCM as well. So interesting one. And that range kind of held for a while, so an auspicious one. So there you go, Mr. Nick. The number one episode of last year, episode 61 from July 24th, talking crazy corn and crude.
All right, so that one I'm looking at the stuff now. Yep. Yeah, I think we had a good talk about the crude oil at the time, just sort of back and forth in the different trade ideas that we had given on that. And there were some good questions that I see now looking back at the list. So yeah, surprising. Yeah, I guess the ones that you enjoy the most aren't necessarily the ones that everybody else enjoys. So
to each their own, sir, on the old Twifo. We got Option God in the chat saying he remembers and he likes the Trump versus oil traders episode from January. I guess that's his personal favorite. Well, there you go. Everyone has yours made the top 5, so you should be happy there, Option God. But everyone's got their own favorites. Nick has his own. I have my own. So, but I like the ones you guys picked too. These are all good ones, and that one stands out for me because that range in crude did last for a while. We talked about it a lot on the show. So certainly that clearly had a lot of resonance for you guys. Turning the tables now to what had resonance for us here in the market this week. We got to talk our old friend crude again. Clearly by the numbers, you guys love yourselves some crude. We saw an interesting week for crude. The narrative for most of 2017 for crude was kind of the push-pull, the balance. OPEC on one hand, internationally, what were their cuts going to do versus the domestic supply story and which side of that teeter-totter was going to win and which one was pushing. And the strong domestic supply was kind of overwhelming a lot of stuff for a long time there. This week we saw a bit of a turn. API numbers showing about 4.992 to be precise, million barrels down in crude supply. So they're saying growing demand, sucking down that supply. As a result, we're seeing crude continue to trend up. A lot of that coming from the U.S. manufacturing sector that is sucking down more and more crude every week. We're not seeing the big thing people were hoping for, and people who were crude bears would see once crude started ticking up. The shale producers really kicking it up a notch and turning it on and driving the prices back down. Not seeing that play out, at least so far. Maybe they needed to drift a little bit higher. I know the narrative for a long time was they needed around 75, a couple of years ago at least, to really break even on production. Of course, a lot of them have improved production, improved efficiency. They've gotten that break-even price a lot lower so they could play at the levels we've been at for some time. So I don't know how much water that argument really holds anymore, but a lot of people still bring that up every now and then. Let's see what we saw out here in crude this week. And of course, it was as a result of this drawdown in supply. We saw crude rally ho mode for the week, ending the week up about to handle 61.5 or so. So for all of you who were saying, man, is it going to finish the week north of 60? It did, and it did so with gusto, 61.5, up about 1.5% on the week. Of course, upside in crude means vol net on the week coming off, but it's still fairly, at least it's a little, it didn't get annihilated as we've seen, other weeks. I mean, it's coming off, that's going to happen. And whenever you get a little bit of upside here, it seems like crude takes a bit of a breather. It needs a protracted down move to really juice the vol up. But still, these levels, not exactly what we would call, apocalyptic out here. So a little bit of firmness has held in, not complete annihilation of vol buyers out there. It has been in weeks past where pretty much if you touched any vol, you got wiped out the week later. The API numbers were strong, good for volume this week. OI up about 5.3% this week. So strong numbers for WTI. And overall, it was actually a more evenly spread out week this week in terms of trading. Usually we see the front month dominating most of it, 46, 50 odd percent. This week it was kind of split. We saw kind of an even breakdown between the Feb and the March, both Feb doing about 36.5%, March doing about 35.5%. So kind of neck and neck for those two. And number one with the bullet, we actually have to go out to March. I think this strike alone probably is the reason why March was so active. It was the March double puts, just lighting it up this week to the tune of 27,000 contracts, 27,091 to be precise. A lot of action pretty much all week, except for, of course, no action on Monday. Tuesday kind of light. The rest of the week pretty active, 11,000 almost on Wednesday, and about 7,200 Thursday and today. So active all week. Net opening over actually almost a little more than a third here, about 10,700 opening on the week. So a lot of that double put strike has just been the strike du jour. Pretty much no matter what's going on in crude, week after week, those double puts are just lighting it up every time. And yet again, it happens this week. Not far behind, though, not to be left out. We haven't talked about this strike in I don't know, it's been some time. It might never have been on our top 10 list, or top 5 anyway. And these are the March 63 half strike, not the one that people have been lighting up. This week they were to the tune of 26,500 of these bad boys, slinging it all. Half of that coming today, 13,700 coming today. The rest, most of it coming on Wednesday, 10,000 and change. The rest kind of broken up throughout the week, and about almost 7,000, about 6,700 or so opening on the week. So a lot of back and forth action on the 63 half strike. Will we get there? Will we stay there? Will we break through there? Will we settle back for the week lower than that? A lot of that driving that back and forth action there. So double puts probably expected. 63 halves, maybe not. A little bit of a change of pace out there, which is always nice. In terms of the front month itself, the Feb, we saw the 60 puts. Again, pretty much the near at the money put there, doing about 16,000 and change, pretty even throughout the week, slightly more today, about 5,600 going up today. Net nearly 4,000 opening on the week, hot on its heels of 59 puts with about 15,500 or so. The lion's share coming today, about 6,000 net, about 4,000 opening there as well. And then right behind it, again, 62 calls, so kind of a nice little even breakdown. 15,400 of those coming again. All this is in Feb, listeners, with about 5,000 on Thursday, 4,600 on Wednesday. The rest kind of broken up throughout the week. Net kind of unched from an OI perspective, actually slightly closing on the week. So not a lot of back and forth, not a lot of new positioning on that strike, which is kind of interesting. And then let's scroll around a little bit as we are wont to do on the strike chain. By the way, you guys can play along yourselves. Play the home game of TWIFO. You can listen live via the Mixler. You can see the reports live at cmegroup.com/TWIFO, TWIFO. Great place to go, kick the tires and light the fires. Or head on over to Bantix, BANTIX.com. Click on sign up for QuikStrike there. You can see all this stuff yourself. Remember, if you're listening after the fact, listening to the podcast, make sure you adjust the expiration settings there on the report so you can put it to today so you can see exactly what Nick and I were looking at when we were doing the show here live. And then, of course, let's move on a little bit. We got a little bit of a longer-term paper lighting it up. This week's big one was the June 2019 50 puts, lighting it up 6,000 times to the tune of 4,000 yesterday and 2,600 today. So 6,600 total on the week. All yesterday is clearly opening. Today, obviously, we don't know yet, but it looks like it might be opening again. So opening paper here on the 50 puts. We also saw nearly 3,000 of the 45 puts in June 2019 going up. About 1,400 yesterday, 1,500 today, total 2,900. Maybe a ratio there, maybe just close but unrelated paper. Either way, a little bit of action out there. Also about 3,000 of the June 2019, 65 calls lighting it up. So June 2019, a place with some action. If you want really far upside, I think the best we can do for you this week, listeners, are out here in Dees of 2019. We got nearly 1,900 of the 75 calls. Dees 2019, 75 calls, lighting it up this week on Wednesday. And we don't have OI numbers on that for some reason, so don't know if that's opening for you or not. Seems like it's pretty much not. So interesting stuff nonetheless. 900 lots of some funky. Usually we see some weirder, farther out of the money strikes. Not so much this week. It was pretty active. Also worthy of note, Nick, is that we have that Feb front month contract, which is pretty active, coming in right in the middle of that strip of weeklies, and yet the weeklies around it not doing a ton of paper yet again. So people will clearly trade short duration contracts. I mean, this Feb contract has 12 days to go, but it's still they won't do the weeklies around it. I don't know. That strip continues to defy logic. I don't get it. So, Mr. Nick, any thoughts on that, as well as what caught your eye this week in crude, maybe from a vol or from a QuikStrike perspective? Have at it, sir.
Let's see. Well, first off, I think mentioning the double puts in the March contract, that opened up quite a bit from it was an increased open interest of over 100%, and that's really not that surprising. I think that once we didn't see a lot of the follow through on the price, the people were going to start to settle back into their ways of, at least in terms of expectation of where that contract is going to go. So we saw trade on Tuesday, but big opening and open interest on Wednesday and Thursday, as you mentioned. So it looks like there's, at least on that March contract, that there's some expectation that we're going to stick around here, or maybe have the ability to drift a little bit lower. I think what I read this week also, in terms of your shale comment, I thought I heard that like 62 plus started to be a place where the shale producers come into the game again. Now it's hard to say that that's going to start happening the day it hits 62, right? And them to have an expectation that things are going to go higher, especially during a holiday period of time in the winter. I would imagine that if there's going to be any impact, it would be going forward, and if we have a sustained move higher in the futures. I just still don't see it. We're up a little bit more this week. I think a lot of that has some Iranian conflict premium in there, in that price as well. So I still stand by the fact that I don't see us like pushing all that much higher, and we're not seeing a tremendous amount of upside overrun in terms of where the option trade is. All our put call ratios, for the most part, are all above 1, which means there's more of a put interest than there is a call interest. So I'm still going to say that we're going to trend sideways to a bit lower. And I think what tells us that as well is we pretty much took half off of our increase in volatility from last week. And again, I think that was a thin increase just based on the fact that it was in the middle of 2 holidays, and probably had a light attendance from a trading standpoint. So we're back off and probably where we should have been last week anyway. I think that like always, we would love to see, or not necessarily me, but I think the community would like to see it trade higher to keep that, getting that vol push. But I just don't see the fundamentals there, or even the trade in the options there pushing us too much higher. So we probably took off some of that absentee volatility, we'll call it, from last week, this week, when people started to come back in. And I think we probably even had people not in the office until maybe yesterday or Wednesday, given that, there were some big numbers out for the unemployment market on Friday. As far as anything relatively interesting, I think when you go out here and look at, and again, the weeklies, I think, I'm going to go out, I'm going to say the weeklies, we talk about them all the time, not being as popular as the regular contracts that are available on the CME group to trade the crude. And I think part of that is still that the integration of the weeklies into the normal sort of product set is just not there. The weeklies are still treated individually. Each week is treated individually as a product. So I don't think a lot of the platforms have gotten to the point of adding them easily. So when you add crude, I don't think those fall into the regular list of expiration. So I think once that sort of problem gets solved, then you might see a little bit more trade. And I know they're trying to do that in the CME Direct platform. They have a new quick options grid that lets you just pull everything inside of a particular number of days to expiration. So as the other platforms start to make that kind of functionality available and stop treating the weeklies as separate products, as they are, per the exchange, probably a mistake that was made when they introduced those. I think we'll see a little bit more activity in those weeklies. And the reason, and we talk about other products being more active in those, and I think just because of the way that they were integrated and demand for them, and I think the marketing for them as well. Of interest, outside of beyond March, we don't see much change in the skew numbers. Our quick skew, we get the puts get a little less expensive, and the calls really are, a little less cheap, but not a tremendous amount of difference from a percent standpoint. We do see a kind of a shift for where the calls picking up some volatility in the March, which is a 40-day contract. So those got we can call them significantly less cheap and more towards a flat to the at the money, or moving towards a flat to the at the money. And then, of course, the February went from being below at the money to a bit above the at the money. Now, again, we're a 12-day option, so our curve is gonna get squeezed a little bit, and that's going to be a natural part of the process as you move forward in days to expiration. But the March is sort of telling in that there was a little bit more of a bid for the calls, even though the volume this week was still a little bit of a bias to the puts, and the open interest is still biased to the puts. So, that's sort of where what I think about the volatility. I think we took some of the absentee premium out of that this week. We did see the curves move more toward sort of a move higher expectation, at least for the 40 days and in. And we saw the puts get a little softer outside of that, but really not anything egregious in terms of people changing their mind in terms of which direction that we think we're going to go to. And the fact that, short term, you're seeing the double puts trade significantly, I still think that the market's probably, playing for a move back to the downside.
Well, if you're hoping for a move back to the downside in the shiny stuff in gold, you were unfortunately not happy this week. If you're a gold bug, maybe a little bit happier. Gold finishing the week up another 10 handles, 1320, well north of that magical, mythical 1300 demarcation line that a lot of people keep an eye on out there. So not a bad week out here for gold. Not perhaps the rock'em sock'em robots week some of the bugs love, but a green week is a green week. You can't really sneer at that if you're long the shiny stuff. Volume-wise, pretty robust week as well, up about 5% from an OI perspective. So that's a pretty good week here for gold. And looking at the breakdown here, again, cmegroup.com/TWIFO, or head on over to Bantix, BANTIX.com. Check it out, the report for yourself. It really is fun to use the report as you're listening, listeners, see exactly what the heck we're seeing here. And you could see for yourself, if you pulled that up, you'd see that Feb was leading the dance this week with nearly half the paper, 47% lighting it up. And if you had to say to yourself, self, which options in February do I think were leading the charge this week? Well, if you asked yourself that, you would say it was the Feb 1,300 puts, doing a whopping 9,611 contracts, almost a little less than half of that coming in on Thursday, about 4,500 going up on Thursday. The rest kind of broken up throughout the week. About 1,000 of that opening. So a lot of back and forth. Makes sense. 1,300 active strike. A lot of people watch that. A lot of people trading that back and forth. So 1,300 puts lighting it up here this week. And then we have to jump all the way out, actually, listeners, out to June of 2018 for our number 2 name / victim here in gold. This is the June 2018 1,400 calls. Yes, 1400, doing 6,147 contracts. The lion's share of that coming on Tuesday. 4,785, pretty much all of it coming on Tuesday. Pretty much all that volume on Tuesday was opening as well, net 4,900 opening on the week. So a lot of people saying, hey, we're sustaining, we're breaking through 1,300, we're staying there for a couple of weeks. Maybe I want to come play on 1,400. Maybe that's the next level. I can see some gold bugs out there liking that one. They certainly did on Monday. A lot of action on that strike there. Then we go back, listeners, all the way back to Feb, to the Feb 13 half calls, kind of splitting the difference. Not quite 1,300, not quite 1,400. Nice halfway step there. Doing about 5,400 contracts this week. The lion's share coming on Thursday, nearly 2,000 coming on Thursday, and pretty much unched from an OI perspective. So a lot of back and forth throughout the week on that 13 half strike. Will it make it there? Will it stay there? Will it break through there? What's the deal? As we saw the vacillations intra week, the 13 halves doing a fair amount of action and then dropping off a little bit again. We got the 1,280 puts here in Feb, doing about 3,700 contracts, about 2,150 coming on Monday. That was where the most of the action was, nearly 2,000 net opening on the week out here. So fairly active week for all things shiny. Let's do a quick scan as we were wont to do. No crazy 3,000 strike spreads this week, listeners. That one's still resonating in the echo chamber. That is gold here this week. Looking here really quickly, we saw some 1,400 calls lighting it up here in October of 2018. About 1,000 of those lighting it up. We saw 1,500 of the same strike, 1,400 calls lighting it up in September of 2018. We saw about 1,200 of the 15 half calls going up in December of this year. And on the downside, all you bears out there, not much to give you really this week, listeners, with the exception of the small numbers about 125. Actually, let's go down. Yeah, 125 of the 11.5 puts going up in, what is that, February of 2019. Yeah, February 2019. So interesting stuff here. Mr. Nick, what caught your eye in the shiniest of metals this week, sir?
Well, I think that the fact that we continued to move higher, even though $10 is not a tremendous amount, or $12.50, it's a 1%. But the move higher, I'm not disappointed. I like to move higher in this especially, but I think that was sort of my first thing. I was wondering what would happen, and again, I think we have to refrain from any sort of expectation going forward until we get the full complement of people back from holiday. So I still believe that there's some thinness to the market in terms of participation, in terms of who's watching it and who's trading it. So when we come in on Monday and Tuesday and see if there's continued follow through higher, then that will be sort of a telling point for us to what we talk about next week, I would think. Not much change. We're a little bit soft in the front contract from a volatility standpoint, but not much change really across the board. I'll call it flat, even though you see reds and greens. It's really insignificant in terms of the number of how much vol has increased one way or decreased one way or another, and not really a great deal of change in the shape of the vol curves when we look at our quick skew numbers. So puts got a little firmer in the short term. Again, we're a 20-day option, so there's something that has something to do with it. But all in all, a pretty indifferent market when it comes to what the skew looks like, volatility itself, and you might even call this $10, $12.50 move sort of a sideways pattern. I'm going to take a look a little bit more closely and see how this looked from just a week perspective, and just on the futures chart we have. Yeah, so we sort of just we moved a little bit higher starting on Tuesday when people were back in, and then we kind of stuck around there. So again, I think we're going to have to wait until next week to see what we think both about crude and gold in terms of what direction we think things are going to proceed. But like you mentioned, nothing really super interesting or significant in terms of particular strikes or overall volume of a given strike. And the big difference here is the crude, we had a put bias on the put call ratio, and here we have a call bias, so everything's underneath one. So more call buyers than put buyers here, and probably not surprising given the continued move up. But again, holidays are tough to make calls from a directional standpoint, so I'll refrain completely, even though I'm not a gold bug or an oil maven. But I still think we have to wait until everybody gets back in the market before we have any really sort of strong opinions one way or another.
Who had strong opinions on things are the people who are slinging the big movers and the shakers for this week. So let's break some of that down right now. Let's see if I could. There we go. That's the right button. And looking back at this week again, this is pure underlying. This is not front month OI or vol or anything like that. Let's see the big winners for the week. Let's keep euro dollars out of there because those are kind of crazy. But they were at 15.62 for what it's worth. But number one, we're gonna say Nikkei yen with about nearly 5%, 4.74% to the upside. Number two, lumber, 4.10%. Number three, platinum, the other shiny metal, 3.88%. Number four, the NASDAQ 100 E-mini, 3.75%. And number five, oats, 3.01%. To the downside, to the dark side, our old friend Class 3 milk, rearing its ugly head again, and an ugly week it was for there, off nearly 13%, 12.73% this week. Number two, nat gas, off about 5.42%. Number three, copper, down a little over 2%, 2.09 to be precise. Number four, live cattle, off 1.89%. And then we got rough rice and the Ultra Bond there, about off right around 1.2% and 0.84 there, respectively. So interesting stuff. Speaking of big movers and shakers, it kind of goes without saying, Mr. Nick, you're talking names and products that are moving and shaking in the market. Another day, another minute, another big move in Bitcoin. I know you guys over there in the land of the strike, aka QuikStrike, have been getting and collecting a lot more data on all things Bitcoin. We actually have the futures now, which is kind of nice to actually have a listed product to sink our teeth into. What was catching your eye from yet another tumultuous week here, the first week of 2018 for all things Bitcoin?
Well, I think initially it looked like sort of the fringe coins were given the Bitcoin for the run for the money. So you saw a lot of stuff tick up this week in terms of, multiple other smaller cryptos doubling, tripling, quadrupling, quintupling this week in terms of value. So, and anybody who's looking at CoinMarketCap or watching will know which one of those are. The Ripples and the IOTAs and the Cardanos and stuff like that. The Trons, those kind of things. They all had big runs up. So it looked like we started to see some of the tails, having a little bit better run than the big body here, the Bitcoin. But then all of a sudden, last night, we went from, we were trending between 13 and 14 earlier in the week, and then we sort of shot up Tuesday again when people get back into the market. And we kind of were bouncing around. And again, it's funny, we talk about the bouncing around. We had a 500 point, bouncing around a $500 range in this thing, or a $500 or $600 range. But then today, early this morning, probably early AM hours, we had a big jump up to from 15,000 to 16,000, and then another jump up where we are in the mid 16. So not exactly sure what drove that, but all of those coins that had good days on the tails, those got beat up a little bit and came off their highs. So not sure what caused that. Again, this is still sort of new. I think the one interesting thing that we noticed is that last week the further out futures were cheaper than the spot, and now this week it's back to where the further out are more expensive than the spot. And typically you'd expect them to be more expensive, but that we did have a little bit of a switch in terms of the term structure of the coin futures. But it's a fun market to watch, right? Because the other ones, it's fun to try to pick the other ones or look at which other ones to watch or pay attention to, or to dabble with a small purchase here and there to see if anything happens. So, again, it seems to me that we sort of hit these trendy ranges, and again, we have a range of $1,000. To us, it doesn't really affect us anymore, $1,000 in that, but we sort of range around, and then we have sort of a move up or a move down and range around again. So we'll see. Volume seems to still be pretty good. I feel like I didn't really pay too much attention to it, but I feel like volume, as good as it was, it's not as good as it was when it first opened. But again, I'm going to leave that to the holidays and wait and see what happens starting next week. But, plenty of action in the price and plenty of other cryptos to watch. And that's been the fun part. Is for me, it's been not just learning about the Bitcoin and the Ethereums and the Litecoin and stuff like that, but then going out and researching the different stuff like I mentioned, the Ripple and the Cardano and the Tron and the Stellar, all those kind of things. Those are all ones that I find interesting and have good practical application. So I encourage people to spend some time out in CoinMarketCap, which is a good resource, and also take a look at our new charts, our Bitcoin real-time index charting, where you can go all the way back. We have the full history there out on the CME Group website. So, good resources. So if you haven't been paying attention, and like we weren't paying attention, Mark, until late in the quarter last year, go out there and start paying attention, because it seems like everybody's talking about it. I went to Christmas parties with people that aren't involved in the market asking me about it. And then just in general, when you have just sort of random people discussing the cryptos, it's really sort of, we've sort of hit that sort of critical point where everybody knows about it.
Certainly have hit critical mass. I was surprised, like you, to not see a crypto episode there in the top 5, but I guess the early stuff of the year was just too dominant. It could not be unseated there with the later stuff. Speaking of some stuff, I hope you guys got some good stuff for us, because it's time to roll on into your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to your feedback segment, the portion of the show where you guys take the reins. Questions, comments, insights, pearls of wisdom, all that good stuff. Send it in. You know how to do it. At Options on Twitter. At Options also on StockTwits. Questions at theoptionsinsider.com. Use the website feedback form or just hit us up live. Like, what do you got here? We got Option Queen asking us, what she got here? There we go. She wants to know, very straightforward. Actually, we have another listener asking the same question. We have Option Queen asking us, quite frankly, how much, Mr. Nick, is QuikStrike? And if my mouse will play ball with me, here we go. I'll get the other version. We have another listener asking a very similar question, Mr. Nick. And I'm going to pull it up right here. There we go. Tim Haver wants to know, what's the cost for the premium version of QuikStrike? I like the free stuff that I play with during the show, and I'm thinking about taking the plunge. So there you go, Mr. Nick. Option Queen in the chat, and Tim writing in. Both want to know what can they get over there at QuikStrike, sir?
Well, we have a couple different levels. We've sort of gotten rid of the real basic levels because we didn't get a lot of uptake on those. So we're just sort of appealing to the premium level, but we haven't made the switch entirely. But we're probably going to go to a $200 and a $300 level going forward. $200 gets you all of the tools that you have in QuikStrike with short-term quick volatility history of 1 month, and then the 300 will be the full professional, which will get you all the tools, all the volatility updates and the ticking futures and all that kind of thing, and then a full year or more of the historical volatility data. So those are our current levels at this point right now. If you get in there and get a trial, you have a chance to get into the lower price level, but that's not going to be there for very long, just because we're finding that we're going through a little bit of a menu reorganization to just try to make it easier. So we're finding people were kind of staying near the top of a lot of the functionality, and we're trying to get it so they can get access to everything a little bit more easily. So 200, 300. I always like to try to refrain from mentioning prices in sort of this historical perspective where it's on tape and that type of thing. But those prices have been around for a very, very long time. So I'm pretty comfortable, especially with the professional level at $300. That's been the case for years and years and years.
Well, we use a lot of services here at the Options Insider. We know how much most of these types of things cost. We can tell you, listeners, that's pretty reasonable for what you're getting here over there. Particularly if you want to get in now, get in on that Chinese menu pricing before it changes. That's $200, $300 for all this stuff. It's a lot. I've said it before. If you're trading these markets and you're not using this stuff, I honestly don't know how you're doing it, because the other sources of analytics on these products are, shall we say, few and far between. Let's see. We got questions. So let's pay off our question of the week from last week. We asked you guys what your enduring memory of 2017, your enduring, market trend or development or event of 2017. We gave you the choice of the death of Vol, the rise of Bitcoin, the unstoppable bull, or other. We had a lot of others come in. We've talked about those before. 49% saying the unstoppable bull was their favorite enduring memory of the year. 32% rise of Bitcoin, and 16% saying the death of volatility / VIX. So interesting stuff there. I thought those numbers might be a little bit different, but that's how it played out. Let's see. Question here from Smack TLK, maybe Smack Talk. I like that handle. Asking, are there options on crude distillates? Well, the short answer is yes. There's a lot of the longer answer. I think it kind of depends on what you're looking for. Obviously, distillates is a pretty broad category. You can count gasoline in that, and naphtha, of course, which trade we talked about before on the QuikStrike platform. You got other distillates. You can go crazy down the rabbit hole. You can get like jet fuel and asphalt. I guess technically even is a distillate or as a residual type product. So you can go pretty far down the rabbit hole. But short answer is yeah, you can trade options on a lot of that stuff. I don't know, Mr. Nick, do you get a lot of people playing in the crude distillates over there on QuikStrike?
Well, here's what I can say to that. I think the best thing to do is, and I will tweet the link out. We put out a new tool on the CME Group website. It is the product and expiration browser. And what you can do here is, Mark, here, I'll tweet it to you. I'll send it over to you, and you can push it out, because there's more people who follow what you got going on your feed. But what you can do there is, then you can go to a particular asset class, and you could start typing in the name or a symbol if you know it, and it'll be separated out by the distillates and all the different subcategories, and then you can see what futures are on there when they expire, the options if there are any, that kind of stuff. So at least you'll get a good idea, and then you're not just limited to the energy products. We have all of the asset classes out there, and it's actually a really nice tool because the product names link to the contract specs. You also can do some charting off of those, off the different line items to get the futures charts, and also get pop-ups with the expirations in there. You also can get an Excel download of all those expirations as well. So I would encourage everybody to go out to the product and expiration browser on the CME Group website. It's on the QuikStrike landing page, and that should answer most of your questions.
Good stuff. We'll tweet that out, listeners. You can get that link. There's a lot of products out there. I know it can be kind of daunting. You come onto QuikStrike or onto Globex there for the first time. You see so much stuff trading there. You're like, well, what the heck is here? So that tool maybe helps you find the needle in the haystack there. Let's see. LL78. Let's just go in order here. Any other good? I guess he means strategy studies. Any other good strategy studies? So many abbreviations here for futures options. That's cool info, but I don't trade collars. More, I guess he means iron butterflies or iron condos. Alphabet soup. This question here. I think he must be referring to a few months back, Nick, when we showed that data from the collar study. Short answer to that is really no. Particularly if you're talking about futures options. There's been a lot of data and studies on trading, vol and skew and things, and a lot of the equity options and index options. So if you're on the index side, you probably can find some stuff. But if you're talking like, the ags or the rates or energies, not as much research out there that you could really find that's readily available, particularly for futures options strategies. I'm hard pressed to think of. That's one of the reasons why we highlighted that collar study, which was a little bit dated. We said it was from, I think, 2012 from the OIC, because it was one of the few readily available, reliable sources of broad data on the space, where they compared one strategy across a broad array of asset classes, including a lot of commodity products. So that was one of the reasons why that study resonated to us, and clearly to a lot of you guys out there as well. Quite frankly, because there's a dearth of other data on that space. I hope some people listening to this will write in and say, hey, here's a link to this great study that I found here. I'm sure some house or some particular brokerage firm somewhere has done some cool little niche studies that just haven't made their way across our desk here. But in general, I haven't seen a lot of great, particularly I've never seen an iron butterflies in crude study or anything along those lines. So you're getting pretty specific here. Unfortunately, I haven't seen, I don't know, Mr. Nick, you're talking to people all the time who are slinging themselves the futures options. You ever come across any intriguing studies that our friend LL78 here may be interested in?
Well, I don't know that there's any studies in particular that people are doing just from option position standpoint. I think a lot of the studies that you're going to see are going to be from a historical volatility standpoint. So there's much of that goes on in terms of looking how that term structure changes over time, and looking how the constant maturities change over time, and where they sit within the history of that of the amount of time in which they're being viewed. But as far as as far as any studies in particular, no. Outside of the stuff that I think what I end up seeing, at least listening to myself talk and then to the other people that we have on the show, is I think people sort of have a flavor of thing that they like, so they study that flavor of trade and pay attention to that over time. But I haven't seen anybody do anything specific, or I haven't come across anything like no Eric Norland thing who has done anything, or nothing like that risk reversal or collar one that we talked about early on. But again, those are hard. Those are hard to probably get people to commit to doing, because it's a lot of work to do it. It's probably going to be done for free, so there's not a lot of upside there. And unless you got a lot of time, or there's this particular reason that you're doing it, it's probably not a lot of people spending time on it. And if they are doing something and they find something significant, in all likelihood, they're not going to give it away, right? So I'd say that you probably should, spend some time looking at some of these specifics, open interest moves, volatility changes, how they relate to each other, that type of thing. So maybe you could find some studies for yourself to take a look at.
Speaking of maybe studies or perhaps articles, we got to have our mandated Bitcoin question here. This week's comes from Nom Nom. I like that handle too. He or she saying, I was excited about Bitcoin, but this article is giving me pause. And they put a link into an article here from Bloomberg. Looks like this came out mid-December, and pretty much the takeaway of the article was 40% of Bitcoin is held by about 1,000 people, and at current prices, each may want to sell about half of his or her holdings. This is by some research at AQR Capital Management. So kind of alleging the fact, which I think a lot of people maybe knew, that early adopters and early miners and people who were developing this crypto stuff, they got in early and they own the lion's share. Some people talk about, what's the Satoshi, what's the the pseudonym for the person who actually supposedly created Bitcoin, has something around $14 billion worth, just that one individual, if they do exist, which is a mystery. But still, so yeah, and then the premise of this article was that, Bitcoin is scary because these whales could decide to liquidate and drive the price down at quite a bit. Now, of course, the flip side of that is, of course, these guys have a vested interest in not doing that and keeping the price up because it benefits them. But it also, liquidity of these products is an issue. I was talking to some people recently who said they tried to sell a small amount of coins on some of these venues, not the futures, but some of these other venues, and they were moving the markets dramatically just with a handful of coins. So there is maybe some concern that when one of these whales wants to hit the bid, it may impact it overall. But that's going to be the case for a lot of these products that have a high concentration of owners. That's going to be the case for a lot of products that have this. Look at broad equities, have a lot of institutional owners that own large chunks. So you can kind of do this analysis for a lot of products. I don't know. I think there's a lot of things that disturb me about Bitcoin. I would put this maybe in the middle of the list as opposed to the top of the list. What are your thoughts about this, Mr. Nick? And does this put you off? Are you going to turn around and hit the bid on all your Litecoin right now?
No, I think you have to. I mean, there's two ways to look at it, right? So it's like any sort of person that's trading in general, or what their plan is going to be. There's going to be people who buy stuff, right, at a level and say, I'm going to invest this much money at this level in this product, and I'm going to sit on it and wait and see, right? So there's that. Then there's going to be people who say, well, I'm going to buy it here and sell here. They're going to trade it, right? So I think it's a matter of what you're trying to accomplish. I mean, for me personally, the Bitcoin, I tend to think in whole numbers, right? So to buy 0.024 of something is not quite as exciting as buying one of something, right? So if I could buy a bunch of ones of something, I'm going to be more interested in that, just from a, an irrational exuberance point of view, in terms of, maybe something happens to this and it goes a little bit higher. But, like you said, in general, a lot of these coins probably have a concentrated ownership, and then there's some coins like Ripple that have ownership that has pulled back from the stockpile and sort of vaulted them, so they can't go out there and limited the circulation. So it's still pretty new. I would just tell people, like I tell anybody who also asks me, especially people in my family that ask, don't put anything in it that you're not willing to go immediately to zero. And if you're and again, my advice would be, and hopefully I take my own advice, is if you put money in and you get a run up in something, take what you put in out and let the rest run. Just like trading, I think I would, if I'm telling anybody anything, and again, I always say I don't know anything, but trade it like if you're just trading long equity options where you happen to be right on something and you take a percentage of them off to get your money back and let the rest run at a zero premium to you. So the Bitcoin, I think we've seen what's happened. The futures have definitely tamped down the rise of the index itself. You're going to see little jumps here and there, and that could all be depending on how many people are trading it. Like obviously the supply and the demand of things is going to come into effect, but you'll see it move around and trend around. I don't know if I would be afraid. I just might say if you want to put money in it, maybe you don't want to go in Bitcoin and you want to do some research and find something else that you like to trade that has a little bit more achievable in terms of actually purchasing some numbers, right? In terms of getting some whole numbers of the coin itself. So I don't know. That's a very personal question that people have to ask themselves.
You heard it here first. Nick saying hit the bid on all crypto immediately. Get out while the getting's good. No, I'm just kidding, of course, but that music does mean we gotta hit the bid on this show. Easy for me to say. But of course, before we go back around the horn for what's cooking over there. We talked earlier about the different flavors of QuikStrike that are available. You can find it all, of course, Bantix.com, BANTIX.com. Mr. Nick, as you guys are working and creating new cool things over there all the time, what do you got in the hopper for us this week from QuikStrike?
Yeah, well, I'm excited that 1 week from tomorrow we will do a big release and we'll have our new spread builder, which is going to be really, really, I don't even have any good adjectives. It's going to be super cool. Basically, it'll be really nice and easy to build stuff, to evaluate those things, to trade, to technically quote unquote trade them and then track them and see how your P&L goes. It's going to be, our trade builder now is nice, but this one is going to really take it to the next level. Also, new calculators coming out, and they're going to be available from every page within QuikStrike. And part of those calculators, it's going to be straight up calculators where you can see a particular expiration. You can do side by sides. You can do synthetics. You can do a quick spread builder, so you can quickly see what a spread looks like without having to leave where you are. So we're trying to get these just really tools in the forefront for everybody. So I'm really excited about those because it's been probably one of our longer development tasks, and it's going to be. I think it's going to be pretty popular, some of the new tools, and I think people are going to be pretty excited because there's a lot of stuff we can do, and those will inherently lead into taking trades and putting them and tracking them into a bigger portfolio. So that's what I would look out for it, and now is really the time to start looking at trialing and then getting on board for the January 13th release of these new tools. So if you're hesitant, I'd say hesitate another week, hang around in the QuikStrike Essentials, the free stuff, and then come out next weekend and you'll get the full complement of everything that's new and released in the new format, the new colors, the new menus, all that kind of thing will be available to you.
There you go, listeners. From Nick's mouth, it's going to be super cool. I like that. I'm looking forward to some super cool functionality over there with the Trade Builder. Check it out for yourselves, listeners, if you have not done so already. We mentioned them before, of course. Check out a lot of cool stuff over there, including you got questions about distillates or the other products over there, cmegroup.com/TWIFO for our report, of course. So if you want to see all the stuff we talk about every week over there on TWIFO, you can do just that. And on behalf of Nick and our friends over there at CME Group, and indeed myself, I want to thank all of you out there for downloading, streaming, and subscribing, and of course for joining us in 2017 and for helping us kick off the new year here in 2018, and we'll see you next week for more of This Week in Futures Options.
This Week in Futures Options is brought to you by QuikStrike, options pricing and analysis software. QuikStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. build trades, manage risk, or explore historical volatility. QuikStrike has you covered with market data reports ranging from open interest to the term structure of volatility. QuikStrike is the perfect addition to your trading toolkit. Learn more about QuikStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuikStrike1. That's QuikStrike1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.